Hello everyone. In this class, I am going to teach you about the journal entries that are passed under purchase and purchase return. First, we will see the meaning of purchase and purchase return. Purchase, it means acquisition of goods or services by a business typically for resale, production or consumption. It is nothing but buying of goods or services for resale, production or consumption. This is the meaning of purchase. And now second one, that is purchase return. It means what? A purchase return that occurs when goods previously bought by a business are returned to the supplier due to defects or incorrect quantities or other issues. This is the meaning of purchase return. Means what? Here see, when you buy goods from the supplier, and later discovers that some or all of the goods are defective, damaged or not as per your requirements, then what will you do? You return those goods to the supplier. This process, it is called as purchase return or return outwards. Again I will explain you. When you buy goods from the supplier and later you discovers that some or all of the goods are defective, damaged or not as per your requirements, then you return those goods to the supplier. This is called as purchase return or return outwards. Okay, this is the meaning of purchase and purchase return. Now we will see the journal entries that are passed under purchase and purchase return. First, we will see the transaction that is on credit. It means what? Here, purchase of goods on credit. Means what? Means you have bought the goods from a supplier but have not paid for them. You have bought goods from the supplier but you have not paid for them immediately. Instead of that, you agree to pay the supplier at a later date. Okay, this is the meaning of purchase of goods on credit. Means you have not paid the cash to the supplier immediately, but you agree to pay the supplier at a later date. Fine. This is the meaning of purchase of goods on credit. This is the meaning of credit. Now, we will see the journal entry for purchase of goods on credit. Purchase account debtor to creditor's account. In this transaction, I am following the golden rules of or traditional approach of accounting. Here, I have already explained about the golden rules of account in my previous videos. I will provide the link in the description box. Please watch that. See now, purchase account. Debtor. Why we have debited the purchase account here? Because purchase account, it is an expense. Purchase account, it is an expense. So, it falls under nominal account. The rule of nominal account is debit all expenses and losses. So we have debited the purchase account and to creditors account. To creditors account. See here, creditors account, it means it falls under personal account. Creditors account falls under personal account because it represents the person. Creditors account, it represents the person or entity to whom money is owed. So it falls under personal account. The rule of personal account is credit the giver. Who is the giver? Credit the giver. So the entry is purchase account debtor to creditor's account. This is the journal entry for purchase. Now we will see the journal entry for purchase return. Here, creditor's account is debited. In purchase return, creditor's account is debited. But in purchase, we have credited the creditor's account. Purchase return creditor's account is debited because of two reasons. Creditor's account, it falls under personal account. Means what? When goods are returned to the creditor or the supplier, the creditor is considered the receiver of returned goods. Means the rule of personal account is debit the receiver. So we need to debit the creditor's account. Here means the supplier. Okay. So we need to debit the creditor's account because he is receiving the goods from the customers. The rule is debit the receiver, and we need to credit the purchase return account to purchase return account. Creditor's account debtor to purchase return account. Purchase return that falls under nominal account, and the rule is credit all incomes and gains. Credit all incomes and gains. So we need to credit the purchase return account. Means when you are returning the goods to the supplier, you will get the amount back. So we need to credit the purchase return account. It falls under nominal account, and the rule of nominal account is credit all incomes and gains. First one, that is for purchase return, the journal entry is creditor's account debtor to purchase return account. See, the creditor's account is debited under purchase return transaction. There is one more reason, that is the reduction of liability. How? See, when goods were initially purchased on credit, the creditor's account credited, and during purchase return, the liability to the creditor decreases. Why? Because you owe them less. To reflect this reduction in liability, the creditor's account is debited. This is the one more reason we are debiting the creditor's account. Okay, so the journal entry for purchase return is creditor's account debit to purchase return account. Okay, now I will explain these journal entries through one example. Here, goods worth rupees 10,000 are purchased from ABC suppliers on credit. The entry is purchase account debtor to creditor's account. Because purchase account, it is an expense, so it falls under nominal account. The rule is debit all expenses and losses. And to creditor's account, means who is the creditor here? See, ABC supplier. We can write ABC suppliers also to ABC suppliers account. If they have not give any names, we have to write to creditor's account. Here they have mentioned the name, that is ABC suppliers. So that we have to write to ABC suppliers account. Means this creditor's account, it represents the person or entity. So it falls under personal account. The rule is credit the giver. He is giving the goods. That is rupees 10,000. Now we will see the journal entry for purchase returns. Here, purchased goods worth rupees 2,000 are returned to ABC suppliers. Here they have purchased the goods for rupees 10,000, and in the next transaction they have returned the goods worth rupees 2,000 to ABC suppliers. The entry is creditor's account debtor to purchase return account. Creditor's account debtor to purchase return account. That is rupees 2,000. Sir, creditor's account falls under personal account. The rule is debit the receiver. Creditors means the ABC suppliers. ABC suppliers, they are receiving the goods. So ABC suppliers or creditors account debtor. Sorry, here we can also write ABC supplier. We have to write ABC suppliers. Here I will write ABC suppliers account. ABC suppliers account means they are only the creditors here. To purchase return account. that is rupees 2000. Debit the receiver, and during the purchase return the liability to the ABC suppliers decreases because you owe them less. To reflect this reduction in liability, the ABC suppliers account is debited. And next one, to purchase return account. It falls under nominal account, and the rule is credit all incomes and gains. Credit all incomes and gains. I hope this example is clear to you all. Okay, now we will move to the next transaction that falls under cash. For cash, what are the journal entries here? For purchase, purchase account debtor to cash account. Purchase account debtor to cash account. Means what? Purchase account, it is an expense and it falls under nominal account. The rule is debit all expenses and losses. And here to cash account. You purchase the goods for cash, means you are paying the cash immediately. Cash account, it is an real account. So the rule is credit what goes out. Okay, so this is the journal entry for purchase. Now we will see purchase return. Here cash account debtor to purchase return account. For purchase return, cash account debtor to purchase return account. Cash account, it is the real account. Cash account is the real account. So, it falls under real account and the rule is debit what comes in. Debit what comes in? They are returning the goods. Okay, so debit what comes in. So, the rule is, so we need to debit the cash account and to purchase return account. Purchase return, that falls under nominal account. The rule is credit all incomes and gains. Credit all incomes and gains. Okay, this is the journal entry under cash transactions. For purchase, purchase account debtor to cash account, and for purchase return, cash account debtor to purchase return account. Now we will see the examples here. You buy goods worth rupees 10,000 and pay immediately in cash. The journal entry is purchase account debtor to cash account. That is rupees 10,000. Purchase account, it is debited because it is an expense. Okay, the rule is debit all expenses and losses. And to cash account means what? It falls under real account. Credit what goes out. Cash goes out for purchasing the goods. And second example, you return the goods worth rupees 2000 and the seller gives you the cash back. See, here they have clearly mentioned you return goods worth rupees 2000 and the seller gives you the cash back. Means what? Cash back. Cash account we need to debit. Cash account, it falls under real account and the rule of real account is debit what comes in. Debit what comes in? Cash comes in. Cash account debtor to what? To purchase return account because they are returning the goods. To purchase return account, that is rupees 2000. Purchase return account, it is credited because it is an expense and it falls under nominal account and the rule of nominal account is credit all incomes and gains. Okay, I hope this example is also clear to you all. If not, please leave a comment. Thank you.